So we're here in Sevilla with President Jin Liqun of the Asian Infrastructure Investment Bank. It is so wonderful to see you again, as always, and to have a conversation about where we're headed in the future of development finance.
Thank you very much. I'm very happy to have a conversation with you about such an important issue.
Tell us the story of AIIB. Where are you today, now nearly a decade after it was founded?
You talked about Addis Ababa conference for development financing. And also, we were set up right off the Paris Agreement. Development for financing is a huge task. It's a tall order. And while all these multilateral development banks had been doing very well for development, for poverty reduction, for women empowerment, but still there's something we need to do, which is to finance infrastructure for tomorrow. And also, the Paris Agreement tells us that we should double down in providing financing for climate change, mitigation, adaptation. So you see, the bank was created at the right time and to work with other MDB to solve some of the very tough development issues.
And now that you've got about a decade under your belt as president and as AIIB, what are the lessons you've learned? How have you done against that original mandate?
I think the whole team, the management team, worked together seamlessly. And we were determined to implement the mandate of promoting broad-based economic and social development through investment in infrastructure and productive sectors. Over the last 10 years, you see, we have done quite a lot of financing. People refer to over $60 billion of financing for more than 310 projects covering 38 countries. These numbers are certainly important, but there are something deeper than all these numbers. And this bank, created in the 21st century, with developing countries as the majority shareholders, need to work with developed countries. And regardless of the fact whether the developed country is the majority shareholder or minority shareholder or the other way around, it doesn't matter. What matters is whether they can work together to achieve the common objective, which is to promote development for all and dealing with environmental problems and climate change. So over the last 10 years, we've been working along this. First achievement, build a bank based on sound governance structure. The bank has been run by international best practice. And the bank has been managed by top-tier professionals from across the world. So we have been working very well with the World Bank, ADB, EBRD, and others because we are on the same level of governance and management.
Now, one of the things in Addis 10 years ago that came out was this idea of billions to trillions. It wasn't part of the formal agenda, but I think the World Bank came up with that language, and it became a big theme that people talked about, this idea that private sector mobilization was going to be essential to fill the gap in financing. How do you assess how that has gone as we are about to begin the negotiations here in Sevilla?
So I think the MDBs have been doing wonderful jobs over these years. Now, ever since 1944, you can say more than 80 years, I think everybody can see the results. I remember when I came to Madrid for the annual meeting in 1994, and there was a slogan, say, 50 years is enough. But we don't hear it anymore because people don't think it's enough. People think the MDBs can continue to do a good job. The issue is, if you look at all the resources pulled together by all of the MDBs, you can still a drop in the bucket so far as the need is concerned. And we often say, well, Asia needs $2 trillion for infrastructure every year, or how much money we need to develop infrastructure projects for tomorrow. But how can you do that, right? On the other hand, I know on a daily basis, every day, there might be 2 or 3 trillion US dollars moving around the planet, trying to find a landing spot. But this money, private sector money, is moving and moving. Can we build a very good landing strip so that quite a lot of money would be safely landing and do well for the development? But that brings me to the issue of how can we mobilize private sector resources through maybe a set of measures. The most important thing, in my view, is the MDBs should not only thinking about how much money we can mobilize, they should have work with the client governments to help them understand the importance of creating a very good macroeconomic and a regulatory environment with policy predictions, with a very good enabling environment so that the private sector investors are willing to invest in those countries.
So it's less about individual projects, really. It's more about creating a market.
Individual projects can mobilize private resources, but they are very much limited. When you improve the enabling environment, then you see the maximum impact MDBs could have. Now we aim at, for instance, we do something. For instance, project preparation. For poor countries, we also have, in our case, a special fund, MCDF, which can help these countries to prepare projects with concessional money, with really grant, okay. And then financial de-risking, and we should help them to prepare some projects and to prevent risks and de-risking, all right. So the project could be implemented free from the major risks.
I think the global north, if you look at the major countries that are shareholders of the biggest multilateral development banks, their fiscal space is shrinking. At the same time, the development needs are growing. And there's this sense that they can fill the gap with private money. But is something going to be lost in that calculus?
First of all, I'm a bit worried about the reduced concessional funding for the development for many low-income countries. And maybe also the regular development financing resources could be reduced. That's why I'm very much worried. But on the other hand, I think, there's an English saying that it's an ill wind that blows nobody good. If something good which can come out of this challenge is that the reduced funding for development should help us to think how could we do the development projects more cost effectively? How can we use those resources to the best of its impact? We cannot simply talk about money, getting money, funding, but we also need to look at how we spend all this money. So I would say the development MDBs, our development institutions should have the responsibility to be working with the governments to have them understand how important it is to improve the enabling environment, and how important it is to put all the money to the best of the uses. We, as you know, we talked about a country program or country ownership. Country ownership is important. If the country does not own this kind of development programs, how can you expect them to produce the best of the results?
That was one of the themes coming out of AIIB, in
Of
fact,
course,
10 years ago.
but I'm thinking country ownership does not mean that, okay, this is my country, I can do this, I can only do this. You give me the money, that's it. That's not the way. So country ownership does not mean we all race to the bottom. Country ownership means the MDBs have the responsibility to work with the client country's government to improve the enabling environment, to set up very high standards for deploying the development resources. If the state governance is not improved, you cannot expect all these resources could be used the most effectively and productively. That's why I believe in very constructive dialogues with the governments and to show how we can do these development projects most productively. I often try to help our client countries to understand how important it is to do projects by high standards. And we can show them some of the role models, some of the projects which are well designed, implemented, and completed on schedule. Now, people tend to ask me, what is your interest rate? Okay, I said, okay, we have basically interest rates for sovereign-backed loans, interest rates for non-sovereign-backed loans, which are a little bit higher. But could you please ask me, how can you work with us to show the projects could be well designed, implemented by high standards, and be operated right after the conclusion of the construction? And then you will find if the project could be implemented on schedule without delay, 6 months, 12 months, even longer, you will find the cost of interest is really nothing.
Right. One of your big themes as president of the AIIB, especially the second term, has been MDB coordination.
Yeah.
You've had some real success there. There have been a number of MDBs now working together more closely. Tell us a little bit about what that has led to. Why is MDB coordination important, and what is it unlocking in the system?
Individually, each and every multilateral development bank is limited in its capacity. By working together, I think the benefit is, first of all, we can certainly pool resources for major infrastructure projects. And when, for instance, World Bank or others hit the country exposure limit, we can chip in. So we can work with the World Bank and others. So when MDBs work together, their voice would be more important because we work together with the government, and the government would take all these MDBs very seriously, right? In, for instance, taking into account our policy advice, right? And the capital market would also, private sector would also feel more comfortable when we work together. So I think we should look beyond the benefits of a particular project for a country. You should look at this group of MDBs stand behind the country. They have confidence in this country because of the improved macroeconomic policies, regulatory policies, because of the improved fiscal and monetary policy, and improved environment for private sector development. So I think this is very much important. And partly because MDBs found their individual institutions' resources limited. But when we work together, we find that the benefit is far more important than increase some of the funding for a particular project.
Interesting. It's not just about the amount of money.
That's right.
That's maybe a good segue to Sevilla, right? This is a conference about the future of finance for development, and the future looks in some ways bleak. There's less money than before. Governments are pulling back. How do you see this conference, and what do you want to come out of it at this moment in history?
I think this conference, hopefully, can bring all these delegations, government leaders, development partners, MDBs, to understand that development is a very urgent matter for many of the countries and the peoples in this world. For instance, in Africa, there are still 600 million people who have no access to electricity. I was in Dar es Salaam earlier this year to work with the World Bank, African Development Bank, to promote AIM 300. Okay, I just cite one example indicating how huge is the gap for us to deal with these kind of development matters. Secondly, amidst the geopolitical headwinds, this conference can also help people to understand that in spite of some of the challenges, we need to reconfirm our commitment to push for development for the future, rather than be driven away from each other. Because you see, recently we find the tariff issues and some other kind of issues seems to create problems and distract the attention from the development, major development challenges. And thirdly, I would say people understand we still need to promote renewable energy to deal with the consequences of climate change, right? Climate change is an issue, I would say, which will not be resolved anytime soon.
And integrates so well with your focus on infrastructure too. One final question, just when we think ahead, maybe 10 years from now, we'll be gathered in some other city. How do you think the financial architecture around development should be created now that we're here in Sevilla to meet some of the objectives you just described?
10 years from now, when we look back, I hope we can see the tangible benefits of working together, staying the course in development, in financing for development. I'm sure definitely we would have some new milestones for us to celebrate. Coming here after hiatus of 10 years itself, in and of itself, is a very good indication. It's time for us to get together again to discuss the financing for development issue, right? It's 10 years and lots of things have happened over the last 10 years. And we find some of development challenges are even more serious.
Yeah.
That's why it's the right time. And I'm looking forward to see really some concrete results which would be produced in this meeting.
Thank you so much. Well, among those things that have happened in the 10 years is the creation and growth and establishment of AIIB, and you've become a major force in this space. So
10 years is a little bit short, but I'm looking forward for the next decade of Asian Infrastructure Investment Bank. I'm sure the bank can do even better moving forward.
Well, thank you. It's so good to see you as always.
Thank you. Thank you.